Hello, everyone. Welcome back to the rationalinvestor.co. This is a Crypto Live special presentation here for you today. One of my site members asked me today, said, Brian, can you maybe just do a little video on oil, try to explain what the heck is going on? So that's basically the purpose of this video. I'll do it as a free video for the entire YouTube and Reddit audience, and if you have any questions, I'm going to go through this stuff very quickly because we want to try and keep this to about 5 minutes. Feel free to pop on over to the site. You can pop into our free live chat room on TradingView. That's an easy way for you to chat with us, or members come on into the crypto live room. You can see Julian's done a few changes here. Site looks pretty functional here. We just so happen to have a short trade in the Forex market, a brain chain setup fire here today. That's what I happen to have on my screen right at the moment that I'm watching. But basically, this is what members CSC. So here we go. It's 2 minutes after 2:22. 5-minute summary of crude oil. What's going on in crude oil, and hopefully we'll get you on your way. So we're going to start off with a sort of a broader market perspective, and I'm going to go through this stuff fairly quickly. So regular site members will understand this is my inflation deflation proxy chart that I like to keep an eye on. Basically, US dollar index versus a commodity basket versus my inflation deflation gauge, the spread between the tips and the TLTs. And for the purposes of this video, I threw on the oil price here, and clearly you can see we are actually in deflationary environment here. The bond proxy works really well to identify that. Commodity prices have been in basically free fall. And the US dollar index is basically going to the moon, right? If you haven't, noticed that in the market, then you must be under a rock. So, that's basically the general theme of the type of market that we're in. Until we start to see, and you can see the bottom here, a nice W pattern on the US dollar index. As soon as we see a topping pattern come in that sort of looks like an M up here, really this is the trend of the market, like if we project over time, until we actually start to see a nice M in the US dollar index. This is a bull market. And everybody that I teach in my courses, and basically through my trading years experience, the long and short of it here is the US dollar index. It's basically the cash proxy in the stock market, and cash is the fear index. So if people are running into cash, that means that there's a lot of fear. And guess what, people? We're heading into the ultimate fear proxy peak in the stock market. Q3 2017 is supposed to be that pivot. So seeing this kind of nonsense does not surprise me whatsoever. People are very fearful right now. If we look at the fundamental situation going on in Japan, obviously their situation is weak. We look at the fundamental situation going on in Europe, they're relatively weak. Then we look at the US dollar and the situation within the US economy, it's actually looking relatively better. Quite a bit of the US economy is dependent on oil prices right now. We've had quite a shift over the past 10, 15 years. So it will be interesting to see how that's reflected in corporate earnings and things like that. But the long and short of it here is, just if we listen to the Fed, they're basically saying that the US economy is on the mend and they can start feeling better, not only removing quantitative easing programs, but also even maybe raising interest rates, right? Which, of course, is the exact opposite of what's happening in both Japan and Europe. All right, so that's our backdrop, okay? So don't fight the market. Fear proxy is running to new highs. Don't fight this, right? All right, let's take a look at crude. Remember we said, along with almost all other sort of greed assets, right? The commodities basically saw money pouring into them through QE, and then, of course, through the Bush years and all that. That is clearly not, the case right now. Money is flying into fear assets and out of greed assets. All right, so here's sort of our longer term backdrop. There's a nice monthly chart of crude oil prices here. going back all the way into the 1990s. In fact, this high right here is Gulf War #1. And I remember when that happened. This was actually the spike into when Saddam invaded Kuwait, and then actually prices backed off as soon as the West it was perceived that that they were going to actually fight them and win, you know. And obviously it was an onslaught, right? All right, so long and short of all this is our last fear cycle turn here, right? Or greed cycle, I beg your pardon. Commodity prices weak. This is the George Bush presidency, massive bull market, right? This is about a year prior to him leaving his presidency. Boom, they all took profits, right? This is when Obama comes into office, right? So he started office around, you know, $30–40 a barrel. Dead cat bounce, you know, classic dead cat bounce scenario here. In fact, you know, probably I shouldn't, and I told Julian I'd do all this ahead of time, but I forgot one. If we do a nice little fib from the lows back up to the highs, all right, there. That's sick. There's the OTE sweet spot that we teach in our course, right? That's basically the perfect place to short. And sure enough, crude oil basically stopped right on a dime there, right? That like, and I just eyeballed this. So just, you know, long and short of it here is this is the optimal trade entry short zone. And guess what? They sold into these rallies, right? If we look at the volume okay, so you know what's happening now. Off of this, you know, this was the 2007, 2008 financial crisis, actually 2008, 2009. And you can see another concept that we teach in our course here. Of course, here's the optimal trade entry long zone off of this rally, right, to buy them back in here. You can see that we also have what we also teach this in the class, institutional order block right in this area too. So not a big surprise if we see the market kind of defend this area, right? On the first go down, you know, it lost the 78.6, but then regained it and turned and rallied back up, did OTE and all that wonderfulness, right? We have just clear distribution here. You can see how, you know, on the volume profile, there really wasn't any interest to do any business up above about 115 bucks. Okay? We just had this quick one spike up here. And since then, you know, basically, you know, the top of this profile here has basically been a brick wall. Anytime they got up in here, sellers just stepped up and squashed the market. We'll see this on lower time frames, but the long and short of it here is this is a very clearly defined M, right? And this is yet another M, right? So we're getting, you know, double top within double top, which is a very powerful signal. People that follow me on Twitter, we had recently one, I think it was the British pound, Australian dollar, double top within double top, beautiful fail, bang, hit target. Really on this move here, you know, you can see here is the point of control right in this area. Anytime they zipped it up into OTE, they whacked it back down, right? That was basically the sellers had the opportunity to sell there. And then once it lost this POC here in earnest, right, then basically, you know, this is, you know, as I, again, talk about, you know, in my, you know, trading experience with John Hoagland, this is basically the profile, right? So it explored the top of the side profile. Guess what? Now it's exploring the bottom side, right? And we call this, you know, basically the notch, right? And there's just a simple adage in trading that notches, you know, in the profile, this needs to be filled in. And, you know, people who follow me on Bitcoin trading, you know, we've been lamenting about how there's an ugly, ugly notch at about 200 bucks or so on Bitcoins. So you can see that at some point, this market really needed to fill in this profile here. And sure enough, that's basically what it's doing. What this tells me, you can clearly see, is that the smart money really is long from about 20 bucks a barrel, right? I mean, this is really where the smart money is long, right? All of this up here was just gravy. And then when they broke it out here, right, through Junior Bush's presidency, all the big boys, you know, they probably all loaded up down in this area here, right? And then, of course, we had this ridiculousness, totally unsustainable, and we're just now in the process of cleaning the market up. When I look at the lower time frames, right, let's first take a look at the weeklies. We're coming up, like I said, against that institutional order block. There it is, right? That's off of the 2008 financial crisis lows, right? And this was QE. We don't have QE now. Market's not in a crisis at the moment. So you really have to wonder whether a lot of these institutions are really going to defend this area. And then if you look at the profile now, you can see that really, it looks to me like this is where all the smart money got off, right? I mean, basically, this is where most of the business is being done. And on this price chart alone, obviously institutional order block, here is the optimal trade entry zone. This is definitely an area we'd be interested in taking a look at. But what I find fascinating, I looked at this, is basically we had, and again, it's sort of reiterating this double top within double top above POC up here. We had the confluence of basically price pattern, right? This massive M top within M top, confirmed by moving average breakdowns, right? You can see the POC up here, failure through here, huge sell signal. Massive fail on OBV, right? You can see beautiful fail here on OBV, and incredible. Look at this momentum divergence here with Willie Stupid. So incredible momentum sell. So you had basically price, volume, and momentum all came together in unison here at this point. If we look at the profile here, you can see there isn't another POC down here. We call this institutional order block, but I don't see a heck of a lot of buying that's going to support this in here. So, and in the face of this meltdown, this is not an investment grade consideration, right? You've got to let the dust settle here. This is a weekly chart, so looking for investors, right? That's just like Joe Sixpack. We just got a big investment sell signal, right? And really, we got no business, stepping in front of this until we get some sort of W. And hopefully you can understand from market structure, bang, 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 see you later, there's a big fat M, right? Really, investors have no business investing in this until we get some sort of W action here. And there just isn't anything here right now. From contrarian perspective, we can argue that the market is officially stupidly oversold, right? Which clearly means to me that if you were long oil and you wanted to sell, now is not the time to be a seller, right? We're stupidly oversold. The public is probably coming in here and they are selling, right? Now, if we hold these lows, right, we recapture 78.6, remember we talked about that just a moment ago, then that means we'll probably counter trend rally, and maybe you can start hunting OTE short levels to start thinking about shorts when you should sell, right? And Willie won't be stupid. Having said that, I don't think we're going to get any sort of buy pattern here for quite some time. So if we zoom in on the lower time frame, let's take a look at the daily just quickly to give you an idea what's going on there. There's that massive market structure failure, right? And so what I often tell students here is that if the market can rally back up into these old lows, you can bet your bottom dollar that there's a lot of institutions and smart money that will want to sell those levels, right? But we don't have anything here for us to even think about buying, right? I ideally like to see a momentum divergence for me to start thinking about buying. No divergence there, lower lows, lower lows. I'd like to follow the money flow. Clearly, money is flowing out of this asset, right? I do like to follow Willie, and Willie's a great proxy for overbought and oversoldness. And people that have taken the program, they'll understand that when we start going into a trending market where we clearly broke through this level here, about 90 bucks, Willie just basically embedded himself in the oversold. You had a little blip out, right? You could have made, but I don't think the indicator itself got out of oversoldness. So really, this is the definition of embedded, and this might stay this way for a while. Really hands off. You think about downside targets, right? These fibs have played interestingly well. There's the old significant low that we drew this whole study off of, there to there, that range there. So here's 113, right? Got a little bit of play. 127 turned out to be a half decent little day trade. 144, you can really see they played with that. 161, which I found interesting, didn't get much play at all. Surprising. maybe that's a tell in itself. But look where 200% is. It's way down here at 35 bucks, right? Remember, we look at our long-term charts, right? There's $37 right there. So 35 would just simply bring price back up into this ledge right here, right? And fill in this notch. That's basically what the market wants, I think. So, you know, no reason to be a buyer here. We are stupidly oversold, so it means if you wanted to be a seller, now's probably not the time. You missed the opportunity a few weeks ago, right? Just that simple. You know, those people that did, and you know, and this is an important thing to understand about trading, right? Is, you know, when we were brushing up against these lows, right? Or maybe even these lows, OTEs, there were long setups here to take to try and see whether we were going to range here and turn. Those obviously those range trade setups got broken with the market breaking to new lows. So I guarantee you there are traders out there that are very profitable that make lots of money that just simply didn't take, you know, either took this trade and got stopped out, right? No big deal. Next bus in 10 minutes. And, you know, I would also say, too, there were probably also lots of trend followers who took this double top within the double top, right? And they're laughing all the way to the bank. So it doesn't really necessarily mean that one strategy is better than the other. What it just simply means is that this market went from a range market, which it did for, you can see, a couple years, right, to now a trending market, right? So the range strategy guys, they were all having a field day through here. Now the trend guys, they get their revenge, right? One might even argue too that this is a really important little lesson for everybody out there, right? The longer the range consolidation, i.e. the more times that range traders get trades off, right, means that the bigger the ultimate move will be, right? So they say markets range, you know, 80% of the time. If we just simply took this window, say bang there, I don't know, just randomly, to there, right? I mean, clearly this is 80% of the time, and this is the 20%. You know, it's very good graphic illustration. All right, now, just to finish this video, I've probably gone way too long. Sorry, Julian, I tried my best. You know, those that are day traders and can trade off of lower time frames, you know, considering the overt negative bias on the higher time frames, I don't have a problem with you really hunting for, you know, shorts to keep working the market lower here. You got to have cojones to take this kind of approach to the market, though, right? Real trading plan, real risk management. You know, if you want to learn those kind of things, you know, we still have a couple seats open in our Q1 program. I'm more than happy to work with you to build you into the type of day trader that you want to be. But it takes serious discipline. So, you know, just looking at the 4-hour chart here, we're looking at the CFD intraday market, because TradingView doesn't give us intraday charts on the crude. So that's why we're looking at this right now. You know, you can argue that we had, you know, again, you know, same sort of thing as off the higher time frames. You know, and that's the irony of technical analysis, is it works often no matter what time frame you're looking at. You could argue off of this 4-hour consolidation, right? We got bearish market structure, basically double tops, right? Bang, 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 bang. See ya, right? You can see the M's in here. So once that's confirmed, then you can start hunting what are called bot setups, which are basically trending market strategies. So in this case, you know, you could argue that this was the fail level of that M top, right? So if we saw the panic dump, right, we got a dead cat bounce, put in a very well-defined little top, and look how the pullback was right off the 25% level. So our little day trading model would basically say, go short that double top, take your stop, get stopped out, walk away from the trade if it breaks back above here. And your ultimate target on this trade is 41.89, so quite a bit lower here still. On this setup in particular, when the 50% level is hit, you should move your stop to break even. So had you taken this bot intraday setup, then basically the worst case scenario on this recent short is basically scratch. So, all right, why don't we leave it at that? Just a couple other things. Thought it was interesting fundamentally. A Saudi prince came out and said probably never see oil above 100 again. You know, if we look at the price charts, we look at the POC, here's $100 up here. You know, I hate to say it, but I think he's probably right. You know, this is anybody who bought in this area, they're just pleading, please, please, please bring the price back up here. I'll never buy another barrel of oil again, right? And that's right at about $85, $90 a barrel. So, you know, and here are all these old highs up at 113. So maybe we do get to 100. I doubt if the market can get it back above 115 anytime soon. Then the last thing that I thought I'd just mention here, you know, we have a key fundamental development going on here in North America in this, what they call the Keystone Pipeline, which will basically just connect the Alberta oil sands, bitumen is what they call it, to the refineries on the U.S. Gulf Coast. If that passes, then basically it's a guaranteed supply of crude for the U.S. market, and you know, that whole sort of oil independence. The Balkans have been producing oil. Of course, now the Americans are some of the biggest oil producers in the world. So you know, the issue here is that the fundamentals really are shifting on this commodity asset. We're getting close to the end of the market cycle. Really, you know, whether it be electric cars, whether it be Keystone, whether it be you know, I suppose the falling, you know, dictatorships around the world. You know, it's interesting in this commentary. Basically, the Saudis said that yeah, they could cut production, but they know for certain that all the other OPEC members would just simply go and fill the void. So really, it's not in Saudi Arabia's interest to cut production because all the other OPEC countries are cheating so much. So, you know, put it all together, you know, the fundamentals kind of match up with the technicals. I'm certainly not an investor in crude, no doubt about it. And really, until we start seeing W's off the higher time frames, kind of like what we saw back here, right? Give me some W's. I'm going to have to just defer on energy and energy-related names. All right, that's my summary. Hope you guys enjoyed it. Wasn't too bearish, but that's basically exactly what I'm thinking at the moment. Have yourselves a great day. All the best. As I said, we have a new quarter coming up for our school. So if you would like to learn how to interpret the market and all these indicators and stuff that I use appropriately, and if you would like to learn how to implement trading plans, all those kind of fun things, make sure you're following good risk management rules, then consider joining our program. We have I think about 3 seats left. So you know, if you do want to get into the program sooner rather than later, and now that I've done this public video, I wouldn't be surprised if those seats go pretty quick. So everybody have yourself a great day. All the best, and we'll talk to you soon. Bye for now.